I think someone got to Trump and told him that this was happening. And he came up with the ruse of calling it tariffs. And all of the metal came back. See, when Western banks short on COMEX paper, which drives down the price, the COMEX sets the price. They will, on their books, they'll buy a long contract in London so that their books are balanced. But when no one's ever standing for delivery, that's fine. And metal can go back and forth, and it always has. They've done this in coordinated fashion. But there are people out there that believe that Trump believes that the European aristocrats and the Bank of England largely were responsible for election interference, were responsible for the color revolution. This is Tom Luongo's theory, and that he's trying to get back at them by draining the LBMA, blowing it up in essence, where these European banks will be on the hook for it. And it's not just bullion that these banks have, it's everything, and it would blow them up. That's why we've been in backwardation for the last 3 weeks. It's now kind of normalized, but it seems to be happening again. All of a sudden, there was a bunch of metal that fled into London to plug the hole. But how long can that last for? Because in London, they have, and this is how they do it, they sell paper. The banks that work on behalf of the government have enough money to overwhelm all of the trades. And so they know where all the pain points are. They know where the options are. They know where the resistance levels are, the moving averages. So they sell with unlimited amounts of paper until the funds or the longs capitulates. And then they just swoop in, cover their shorts by driving the price down, and everybody wins.
Paper. They're not selling the actual metal.
That's the key, is that you're right. And in London, as an example right now, there are outstanding contracts that amount to about 2 billion ounces of deliverable contracts that could stand for delivery against a float. Those are the bars backing it, of about 150 million ounces. They're trading 600 million ounces a day, and they only have 150 million ounces of paper. No one ever stood for delivery, ever. But now they are. And it started in 2020. I started screaming about the COMEX and the LBMA are being bled dry. I talked about how 40 countries brought their gold back from the Bank of England and the New York Fed, which forever gave them access to COMEX and the LBMA. Everyone was repatriating and slowly gobbling up. The reason people can't see this is because we live in a society where instant gratification isn't fast enough. And I said, this is something you cannot go like that. You'll blow up the whole system, and it will only hurt you, whoever you is accumulating it. China, Russia, Saudi Arabia, India. And I've been screaming that forever, right? And China, the largest producer of gold in the world and second largest of silver, is flying all around the world buying doré concentrate, paying double what the West will and shipping it back so no one knows how much they have. And then they stand for delivery on the LBMA and COMEX quietly. Not too much. Don't rattle the bushes. Just keep siphoning it away, because there is a delivery mechanism. During my career for 35 years, less than 1% of contracts stood for delivery. Now we're seeing massive amounts.
The storm has begun. And this time, it's not just economic noise. It's a direct hit on the foundation of global finance. Andy Schectman is sounding the alarm, warning investors that China's retaliation and the collapse of Western paper metal markets could ignite a once-in-a-lifetime explosion in gold and silver prices. If you think this rally is just another cycle, think again. Behind the scenes, nations are quietly repatriating their gold, and inventories of silver are vanishing. The illusion of paper wealth is starting to crumble. Stay with me, because what's coming could change how you see money, metals, and the global financial system forever.
They're all owned by 4 companies, and maybe the information is don't go there. You know, and you know, you could talk about Bart Chilton. I may have said this on your show before, but Bart Chilton, everyone who owns silver and gold, silver in particular, should watch Chris Marcus's show, Arcadia Economics. Type in Arcadia Economics Bart Chilton. And in that, he was the head of the CFTC, the Commodity Future Trading Commission. And he said to Chris, after Bear Stearns failed, he said this on the show, still up there on YouTube. He said, Bear Stearns went out of business largely because they held the largest short position in the world in silver on behalf of the U.S. government. And that when the price went from 9 to 21, it put him out of business. And Jamie Dimon was called into the offies with Hank Paulson and Ben Bernanke. And they said, Jamie, we need you to take this short position. We need you to do this for us. And he said, fine, I'll do it, guys. I'm sure they worked out a sweet deal for JP, but I'll be in violation of position limits. That's okay. We'll give you like 90 days. Get your house in order. Take it. We're all good. And everyone wins. Great. At the end of the 90-day period, Bart Chilton went into his supervisors, which would have been Hank Paulson, the Treasury Secretary, and said, not only have they not pared down the short position, they've increased it. They're in violation of antitrust law. They're in violation of our agreement. They must be prosecuted. He said on Chris's show, and I quote, they told me to back down, Bart. It's a political decision. Now, here's the crazy thing. Bart Chilton died very shortly after that. Week or two, he was gone. And they say it was natural causes, whatever.
Bullshit.
And maybe it was, maybe it wasn't. What I am saying, so this has been a game that has been played at the ultra high levels. But for most of our lives, Sarah, these countries like China and India and Russia, less Saudi Arabia because of our alliance, which is now fractured. But all of these countries were not coordinated, motivated, sophisticated. They were borderline quasi third world. And now they're the opposite, wealthy, sophisticated, motivated, coordinated. And they say, we see what you've been doing with silver to rule the world with your military industrial complex and the copious amount of silver it takes to create and manufacture high-tech weaponry. We see what you've done with gold by suppressing it because you went on a 30-year run of suppressed interest rates. And if you have really low interest rates, Gibson's paradox says gold should go to the moon. It is the canary in the gold mine. So they stepped on both for different reasons. And if no one stands for delivery, if you just paper settle everything or roll the contracts over, use it as a casino, as speculation, or accept money instead of the real thing, which everyone did, great. The game goes on forever. When you build a system on paper promises, you can do that. That's Bernie Madoff. And what happens is the first client for Bernie Madoff says, I need my $40 million back. Okay, here you go. And then it starts to snowball. I need mine back. I need mine back. And then they see that it's becoming difficult to get the money back. And it really starts, we got you. And so I think someone got to Trump and told him that this was happening. And he came up with the ruse of calling it tariffs. And all of the metal came back. See, when Western banks short on COMEX paper, which drives down the price, the COMEX sets the price. They will, on their books, they'll buy a long contract in London so that their books are balanced. But when no one's ever standing for delivery, that's fine. And metal can go back and forth, and it always has. They've done this in coordinated fashion. But there are people out there that believe that Trump believes that the European aristocrats and the Bank of England largely were responsible for election interference, were responsible for the color revolution. This is Tom Luongo's theory, and that he's trying to get back at them by draining the LBMA, blowing it up in essence. Where
I think go ahead, finish your thought.
These European banks will be on the hook for it, and it's not just bullion that these banks have; it's everything, and it would blow them up. And the way you would do that is before they figure it out, you say, no, it's tariffs. We need to bring back our long contracts to cover our shorts because people are standing for delivery. We don't want to blow ourselves up. And all of this metal comes back. Now, if I had to guess, fine line between conspiracy and reality, maybe the U.S. government said, fine, you bring this all back because we are going to, things are changing with silver. It's going to be a critical mineral. Things are changing with gold. It's going to back the back end of the treasury market, as I've talked to you about before with Judy Shelton. And you cover your positions, get your house in order, but you're going to sell that gold and silver to the Treasury Department under the guise of the Exchange Stabilization Fund, and we're going to house it because we need it. So you get your house in order. We're going to take the gold and silver off your hands. Everybody wins. And who gets left holding the bag? The European central banks. Now, who sold, as I mentioned the other night? The European central banks. Who bought? Or commercial banks. Who bought? The United States commercial banks. So there is a fine line, but all I can tell you is that this game, which was, they were all copacetic with one another. Maybe under this administration, they're not. That being the European Union banks and the Bank of England with Trump and this administration. But now it's almost like every man and woman for themselves, get as much as you can, bring it home and hold it, reshore it. It's not about tariffs. It's not about arbitrage. It's about reshoring this stuff and integrating it into the system. So it's going to be very volatile, very interesting. But if one of these banks in London, at the LBMA, failed to deliver. This is when the whole system can blow up, because the systemic chain reaction, if HSBC Bank can't deliver, what does that mean about their interest rate program, their Forex department, their securities department, everything? You would see a run on the banks, and the contagion and the systemic chain reaction, poof, just blow it all up. It's a big deal.
Subscribe to Business Upside for more useful insights.